In this video, I'm gonna give you 3 financing options for investment properties. What if I told you that these 3 financing options, you could get properties for less than 10% down and with bad credit? If that's something that you are interested in, keep watching because we're getting started right now. The first financing option is a portfolio loan. A portfolio loan is basically where a local bank is lending out the money and they're keeping it on their books. They're keeping it within their portfolio. This means that they're not gonna be selling your loan on the secondary market. If you've ever invested in real estate, if you ever bought a piece of property, you know that whenever you go and you buy the piece of property, about a month, 2, 3 months down the line, you get a piece of mail in your mailbox saying, hey, such and such company has bought your loan and now you have to make payments to this company. Now you have to go through the whole process of actually setting up another account with this other company, and then that company might actually sell it to another company, and it goes round and round. But the portfolio loan, that doesn't actually happen. Whatever bank, whatever local bank that you go with, they are going to keep that loan in-house. The reason why portfolio loans is such an amazing option for financing real estate is because most of the times they're going to offer you better rates because, again, they're not selling on the secondary market. So whenever you're dealing with these local banks, you're dealing with a person. The person that you are dealing with is giving you the money. So you can negotiate with them on better rates. You know, if you don't want to pay a 4%, you might want to pay a 3% interest rate, which leads me into another benefit for portfolio loans, and that is a lower down payment. It's the same reason you can get better rates is because you're dealing with a person. You can negotiate a lower down payment. Now, for my portfolio lender specifically, they will allow you to put 10% down on an investment property. Yeah, I said an investment property. And while we're on the topic of benefits for portfolio loans, they actually have a lower credit score limit. Again, the portfolio lender that I deal with will actually lend to you at a 580 credit score. Now, if your credit score is lower, you might have to give up, some down payment or a higher interest rate, whatever it is, but it's just the flexibility that comes with portfolio loans. And to back it up just a second, for the lower down payments, if you do put less than 20% down on a property, you're going to be paying PMI basically wherever you go. If you want to create a life of freedom with real estate investing, go ahead and hit that subscribe button down below and click the bell icon to get notified when I upload a new video just like this one, because this YouTube channel is all about helping you create that financial freedom through real estate investing. So again, if you're interested, hit that subscribe button down below. So the second financing option is actually hard money loans. I'm going to go into some detail with this because hard money loans gets thrown into the basket of no money down real estate, which you can absolutely do that. And I'm going to show you how to do that right now. First, a hard money loan is basically a person or an organization that will lend you out money on like a 6 to 12 month loan. They do this because they're going to get a high interest rate. So you're going to be paying about 6 to 12% in interest rate, and you're going to have to be paying points up front. So if, let's just say you're having to pay 1 point is 1% of whatever price it is that they're loaning out to you. If they're loaning out $200,000 to you, you're gonna have to pay 1% of that $200,000. So you're gonna have to pay $2,000 to get that loan. The reason why hard money loans are so amazing is because they're not really looking at the borrower. They're still looking at you. They're more so looking at the property. Why is that? Because for one, they're gonna be lending out this money to you at a high interest rate. So they're getting money on top of that. Now, if you default on the loan, if you default on the money that they lent out to you, they can actually seize that property. So it's exactly why they don't really look at you as a borrower. They more so look at the asset because, again, if you default, they get the property. But this leads me into the no money down real estate using hard money loans. In a nutshell, hard money lenders will typically lend out between 75 and 80% LTV. That stands for loan to value. So if a property is worth $200,000, they're going to lend out, 80% loan to value. So if the value of the property is $200,000, they're going to lend you out $160,000. Let's just say for easy numbers, you bought a property for $100,000 using this hard money lender that lent you $160,000. Well, now you bought the property for $100,000, and let's just say you put $20,000 into it to actually bring up the value to $200,000 again, but they lent you out $160,000. Well, now you're all in with this property, $120,000, and you sell it for $200,000. You just pocketed that 80 grand minus some fees. Basically, you're coming out with 80 grand. And how much money did you put into this deal? You might have had to pay the 1 point or 2 points, but that's it. So basically no money. They lent you out the $160,000 to pay for this property for an overall cost of $120,000. That's the power of hard money loans. Yes, they can be expensive depending on how long the rehab takes on the property. So you have to factor in all this stuff, like how long is it gonna take you to rehab? How long is it gonna take you to sell? So you need to be careful whenever you're dealing with hard money loans, because I don't want it to glamorize it. It is glamorous, like buying real estate with no money down and you just all of a sudden made 80 grand. Like, that's cool and all, but you also need to be aware of the risks. Some of the risks involve you not running your numbers right. So if the property is not worth $200,000, it might only be worth $130,000. Well, now you only pocket 10 grand, but then you minus the fees, minus whatever else, and you might be in the hole. Also, you don't have enough money to pay the 3 months where that takes 2 months to rehab and 1 month to actually sell the property. I'll be sure to make a specific video on hard money loans. So again, if you're interested in that type of thing, go ahead and hit that subscribe button down below. The third way is actually seller financing. Seller financing is actually one of the best ways to finance a real estate deal because the possibilities are endless. The length of the term, the rate, the down payment, whatever you put inside the contract. I've actually seen inside of a contract where the buyer will walk the seller's dog for a month, and the possibilities go on and on. Seller financing is where the seller agrees to hold the note on the property, also known as a mortgage, and then the end buyer, you, come in and you actually start paying these monthly payments to the seller. So the seller in this scenario becomes the bank. So we already talked about some of the benefits as real estate investors to using seller financing to finance your real estate deals. Lower down payment because you're dealing with a person one-on-one, kind of like how you're dealing with a portfolio lender. You're dealing with that person one-on-one. You can negotiate the down payment. You can negotiate the rates. You can negotiate the monthly payments. Whatever it is, you can negotiate it. If you want to know how to find these seller financing deals, there's gonna be like a video card up here that I'm gonna link to another video that I created about seller financing, how to find those sellers. Now I created another video on how to find off-market properties, exactly how to do it. There's gonna be a video popping up right here. If that's something that you're interested in, I highly suggest you go watch it because as you know, as a real estate investor, off-market deals are naturally the best. So I'll see you in the next video.